All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Tuesday's edition of PremarketInfo.com, where we prepare you for the most important hour of the day, the first hour. We'd also like to give a warm welcome to all our listeners today on Benzinga Radio. Good morning to you, Dennis. We got the S&Ps trading down slightly.
Yeah, we got them down a little bit here, Joel. They were down a little bit further. We had a low at 1267.50. We bounced up a bit, trading 1271.5 right now.
Okay, downside is pretty well defined with yesterday's low at 1262, Dennis. But I want our traders to keep an eye on 1280.50. That was the Globex high, the high we made overnight. That coincides with Monday's high at 1281.50. So hard to get bullish until we can clear that 1280 level. Dennis, J.P. Morgan back in the news.
Yeah, J.P. Morgan, Bloomberg announcing there after the close that the trading losses might have grown to $4.2 billion, so they continue to grow. They also said that it could take as much as to the rest of the year to liquidate the position. So obviously that whale of a trade still hurting J.P. Morgan there, Joel.
Yeah, what a shocker, Dennis. They were pretty surprised that they just couldn't get out of that.
I know we've been saying on the show. Yeah.
It cleared up the books. Just real quick, technically speaking, we have hit 30.62 in the pre-market, getting a slight bounce off that level. That is through yesterday's low, which was 30.83. Dennis, a couple levels to keep an eye on here. 29.80 and 30.03 were some lows that we had back in late November, early December. Of course, the lows of the move at 27.85 back in October. But Dennis, as we were discussing, prepping for the show, you're starting to get ready to press the buy button on some of these banks.
Well, I was looking at. I don't know about pressing the buy button on the banks overall. We were talking actually yesterday, and I do some. Obviously, I do. I'm a trader, and that's my regular income. But I do, run an investment portfolio for me and my wife, obviously. So I have some longer term stocks. I'm looking at the J.P. Morgan chart, thinking this thing's starting to look pretty cheap. You're coming into that good support back from October. This thing got down to 28, 29 bucks. You wonder if you should buy it. But then you start looking at the charts of some of these other banks, Joel. Man, Morgan Stanley's approaching those lows. Goldman Sachs is approaching those lows. And then you go out to the weeklies. And if you go out and look back to 2008, we're starting to get ugly here again on these financials overall. Obviously 2008 was and 2009 the financial crisis. Are we going back into another financial crisis, Joel?
Well, Dennis, if you're going to buy these banks, what's the driver? I mean, how are the earnings going to improve? I mean, why would you be stepping in? What is the driver for you to be buying these banks?
Yeah, as a trader, I don't think you should be buying them here. You can obviously always make any trade if you have an out, but make sure you have tight stops. Like maybe the J.P. Morgan bounces off the 30 area. It's a big psychological level. It gets down there for the first time. If it was to test it today or tomorrow, maybe it gets a bounce there for a trade. But don't let that trade, become an investment thinking, oh, well, these banks will eventually be back, JP Morgan will be back at $45, because you don't know. You just don't know. We've obviously got problems over in Europe still, Joel. There's so many unknowns in the whole sector. It's hard to, come in here saying, well, eventually these banks are coming back. Well, you've seen in 2008, 2009, it got really, really ugly there, and in all likelihood, if you're trading on margin, you would have got a margin call if you were buying any of those banks back then. So trading and investing is definitely two different animals.
Okay, just mentioning that Morgan Stanley, I don't know if someone is anticipating that Facebook IPO to be a flop, but this stock has almost got cut in half here since getting over $21. Dennis, we are approaching the October low in this stock at $11.58. I mean, when is the bleeding going to stop in this Morgan Stanley?
Man, I don't know, Joel. That is just an ugly chart, though, because you got to look what a year it had up till, mid-March when it topped out. The thing had bottomed in November. If we go and look at the November low at around $12, runs all the way up here, Joel, to 21.17 or 21.19, and then just gives her all back over the course of 2 months here. Obviously, there's problems here. Like stocks just don't fall 30, 40% in 2 months if there's not more, issues here. I think maybe, some of these banks are still a concern. There's euro problems over there. Obviously, the J.P. Morgan trading losses has put a damper on the whole sector, where it's got investors concerned that these banks are still taking on too much risk. I don't know. Like you could look at it from a trade and say, well, we get to that, maybe out October low 1158. Maybe I'll try for a trade there. But man, these charts are not pretty.
Yeah, speaking of one ugly chart, Deutsche Bank, Dennis, hitting $52 in the end of March,
Oh
and now we're
wow.
trading at 32.
Yeah.
I mean, I got to give it to Bapasani here. He said that we were decoupled from Europe a little bit. So, yeah, we're decoupled as the fact is that the S&Ps aren't trading under 1100. I mean,
Don't-
we're on our way there, Dennis, but look at the chart on this thing. I mean, $32 is major support. But boy, someone thinks that there's still some problems over the pond.
Yeah, there's definitely still some problems over the pond there, and I think that's hurting. That's obviously coming into all your U.S. financials too. There's just concerns in the financial sector. People don't want to own financial stocks right now. So long term, who knows where they go, but short term, this sector is completely out of favor, Joel.
Yeah, ING under $6 here, Dennis, going
Wow.
under the October low. The October low in ING was 580, so this stock is just trying to hang on for its life here. Barclays, a similar situation, selling off. That has a little bit ways to go to the October low, so maybe that's could be a potential short, Dennis. But so overall, I guess we're saying it's a little bit early to dip your toe in the water in the bank stocks.
Hard to. Like we were saying, you can put anything on for a trade, but make sure you have tight stops. Like look to, previous lows or something like that. Have an out, because that's how you turn these trades into, that's always the problem with traders, especially, retail guys that don't have as much experience. They'll put a position on saying, oh, it's going to go back, but they don't have a game plan. You need to have a game plan, Joel, because if you don't have a game plan, all of a sudden the stock starts moving against you, then you don't know what to do. You're like the deer caught in the headlights, and all of a sudden your trade is turning into an investment, and you're like, oh, well, it'll come back eventually. Once you start hoping in a trade, you're in real big trouble, and that's how you get hurt. So as long
Okay,
as you have that game plan, though, you'll be okay.
okay, we got enough of our bank rant here. We got to run on the banks. We have Hewlett Packard in the news.
Hewlett Packard just trading up a little bit here pre-market. They've talked to a judge there. Oracle, I guess, stopped servicing their software, so they're saying they want some damages from Oracle. 21.20 is where Hewlett Packard. So it's trading up about 16 cents on this. But talk about an ugly chart here, Joel. Hewlett Packard just can't do anything right. This thing is, approaching. Obviously, it's making new lows here. Just a week ago at 2057. It's up at 2120 right now, so maybe you look at that 2057, it gets back down to their area. Maybe you could try a trade, but this is an ugly chart.
What was the news? They sold a printer?
I think it's something to do with Oracle not servicing their software. So they think I think it was something like 4 billion or something they wanted worth of damages. It was a crazy amount. I don't have the story in front of me right now, but it was a crazy amount of money. So obviously maybe shareholders are excited. Oh, maybe they'll get some money from that. I mean, Hewlett Packard. It's tough. It's a business model that's broken. Apple's eating their lunch too. So it's tough to look at these trades from the long side.
Okay, maybe this is still a little bit with the Mark Hurd battle going on, a little animosity between the two companies. But you're right, Dennis. Keep an eye on this 2057 here. So far, Meg Whitman has not been able to do the job that everyone thought she could do. Starbucks, Dennis, that's in the news as well.
Yeah, Starbucks acquiring a little company, Bay Bread, for $100 million in cash. The stock's trading down here, but if you actually look at the chart, I'll try to get you to yesterday's chart here. Had a heck of a run up yesterday afternoon, Joel. It was trading around noon. It was trading around 51.75, ran up to $54, so it's just had a heck of a move. It's giving a lot of that back this morning, trading 52.85. It gets back to that 52 area, had some consolidation there yesterday. Maybe you could, find some support in that area. I think there's a little bit of air down there at 52 though.
How long will people pay $4 for a cup of coffee? Is a question that we have.
This is what I questioned, way back in the day. Like, I'm not a big fan of this. From an investment standpoint, I don't like the stock at all. Let's go back and just look to where this thing got during the financial crisis. You go back 2008, 2009, this thing got down to, what is it? What's the low there, Joel? 706. I've got a print down there. I don't know, even lower than that. I think it traded, but say it got to $7 down there. You know, the chart's funny. You can't even read it because it's priced so low. But $7, 2000 end of 2008. The stock got up over $60 here 2 years later, $62. I mean, back in 2008, 2009, people were saying exactly what you just said. We in a financial crisis, nobody's paying $4 for a cup of coffee. They're going to go to their Dunkin' Donuts and get their coffee for $1. That's the first thing you cut out is $4 coffee in a financial crisis. So you think these banks are starting to get weak. You wonder if it starts to flow over into some of these other sectors here. I mean, here's a stock. It has come off from where it was there just a month or and a half ago when it got up to that $62 area, trading 52.85. But when you look at that chart and it came from $7 2 years ago, this could go down a long ways yet. So you think it's
I
got value here? I'm a little skeptical on that.
You know, Dennis, I just have to go to the charts here. And we hit 51.49 yesterday before that wicked rebound.
Yeah,
If you look at that 51.49 level, that coincides with three lows that we had back
yeah,
in mid-May.
yeah.
So 51.50, if you're a long-term investor, you're holding on to this stock, you've got your GTC order out there at 60. It's not getting done anytime soon. And if you don't get out, if this thing takes out 51.50, you're going to be getting out at what, $48, $44? I mean, this is a critical level for Starbucks here. 51.50 is a level. I mean, we're still a buck and a half away from it, but boy, oh boy, it's just all those lows there 4 times. There's no such thing as a quadruple bottom. There's a quadruple bottom. So there's no such thing. What is it? Quintuplet bottom? Fifth time, Dennis?
Yeah, and this is a good point you're making here, Joel. Like we talk about support, we talk about resistance on the show a lot. Support is good for a trade if it holds, but then if it starts to break down through that area, you can use support in a different way because you have a lot of other traders probably leaning in the same area. So this thing starts trading down through support, 51 and a quarter or so. A lot of those traders, might wash out, and then you can, actually make it maybe play for a short through support. So basically, two ways to play support. You buy it off the level, it takes it out, then maybe you short it as it's going through the level. So keep that in mind. If it does take out that 51 a quarter, not saying it's going to do it today, or 51 and a half, not saying it's going to do it today, but if it does do it over the course of the next week or two, you have some air down below. We had a big run up there in early March, so there is some air where this thing could go down $3 or $4 in a hurry. So keep that in mind if you're trading, but I'm not buying $4 coffee, Joel.
Okay. Why would a company raise their dividend a penny?
I looked at this last night, actually. I was looking at this. FedEx comes out, raises their dividend by 1 cent. I was like, ooh, thanks, 1 cent dividend. Hasn't had any trades here today. Was trading down after hours, though. And you might say, oh, why is it trading down on the dividend increase? Well, actually, they announced a 26-cent charge against fourth quarter results. So maybe, they didn't want their stock to get hurt too bad. So they're like, oh, we got to announce this charge. Well, let's raise the dividend here. And then, investors will be happy and their stock won't go down. I don't know, a whopping penny, man. That doesn't seem too exciting for me. I'd be surprised this thing doesn't trade through and trade down today. $85 was kind of critical support. This whole $85 area. I started taking it out there yesterday. I think there's some air below. If we start trading 84 and a half and start cutting really lower here, I think that 85 area becomes resistance then, Joel.
Yeah, kind of a funky pre-market chart here, Dennis. When the news came out, you got a spike down to 84.22 on pretty low volume, and then you get a rebound up to 85.20. I don't know if that was a cross print after the close or something.
Could have been.
Yeah, because I don't know why it would trade up like that. But similar to the Starbucks chart, Dennis, this thing is just sitting on a cliff here.
Yeah.
84.52 was yesterday's low. That's through the double bottom that you had in mid-April at 84.86 and 84.90. So here's another chart, Dennis, where if you're hanging on to this thing with your GTC order at 95 to get out, this thing takes out 85, you may want to reevaluate that strategy.
Yeah, it's a scary one to think about. I always remember UPS often. If you've got one of those in the news, the other one tends to track it. Those follow each other very closely. So for you pair traders out there, keep an eye on UPS. If FedEx starts to break down, wouldn't be surprised if UPS starts to break down too. And actually, looking at that UPS chart, UPS has already started breaking down. Joel, I just was just bringing it up here for the first time, where you had that critical area there around 73.5. We started trading through that the last couple days, so you already got UPS breaking down. That might be a little tell on your FedEx too.
Yep, big low at 72.15. You have to keep an eye out for UPS.
Just one more quickly in the news. Dollar General announced earnings there last night. Also announced a secondary offering. So actually got initial pop. I think Joel might be able to find the after hours high for you. Got initial pop. I remember trading up on the earnings, but then they announced a secondary offering and boom, they knocked the stock down. Don't like secondary offerings. Stock is trading at 46.03 right now. There's a bunch of critical lows here, Joel. I'm just looking. This whole 45.5 area had 3 or 4 bottoms. That might give you some support here off the hop. What's your take here?
Spiked up to $50.
They got to 50, eh? Woo.
Yeah,
And
yeah.
they didn't read the whole headline. They should have read the secondary offering part.
Uh-oh.
Yeah, yeah.
And then immediately when the secondary came out, is taking a nosedive down to 45.98. Decent amount of volume associated with this. I do like all those lows that you pointed out, Dennis, at 45.5, so that could be a decent level. But what was the secondary price?
I don't think they've announced it yet, so that's something to keep in mind too. I have not seen the price go by. If they have, I've missed it, and that's something to keep in mind because those secondary prices often act like a magnet. So if this comes out like 45.5, don't be surprised if it trades there. So keep an eye on the headlines when they do announce what the secondary price is. Sometimes they take a day to do that. Keep an eye on that because those prices often do act like a magnet where the stock will try to trade towards that price.
Okay, and what's a day if we don't talk about Apple?
I mean, Apple is just it had a crazy move there yesterday too. Let's just look at yesterday's chart here. I'll bring it up for our viewers. This thing got down to 548, Joel, 548.5. Had a wicked rally in the afternoon. A lot of things did. Trade up to the 565 area, then sold off a bit, closing, and it's now trading 563.19. But here's a chart. It was consolidating back, broke down, come back, testing this area. I don't know. It looks like a little bit of possibly a sell up here to me.
Well, Dennis, we had talked about that 552 area. It did get below that and had a wicked rebound. Probably on that break, probably someone decided to sell like 25,000 shares or something, to send it down $10. The way that thing trades. Yeah. But what I've been noting in that is for the last 9 days, with just a small caveat, it's traded between 550 and 580. Got under 550 yesterday, and didn't spend much time above 580. So really a lot of consolidation in this. You had the close and the high at the same area, right around 565. 65.80 was the close, and 64.29 with the close, and 65.80 high. So keep an eye on that. I mean, I guess you have to play it from the short side till we can get above that 566 level.
One other stock here just before we close the show, Facebook. We've been talking about this one. Joel was a little bit bullish off the hop. We haven't been giving him too much heat, but man, this stock just continues to trade lower. Made a new low again yesterday. It's trading down a bit in the pre-market, 26.72. Joel, you call another bottom on this thing or what? I don't know. Is this thing going to zero? Where is it going?
Dennis, I'm very disappointed in myself. I have to admit, because first of all, I don't have a Facebook, and I have just been very, very negative on it. My kids have it, my wife have it, and I'm like, hey, if I had a Facebook, I'd be dead in 6 months. I mean, people would track me down, but. So I said, okay, well, everyone tells me I'm wrong. My family, my girls, they tell me Facebook is a great thing. So I say, okay, I'm wrong about this Facebook. I'm going to take a bullish stance on it, okay? And look what happens. You got to keep an eye on this 26.44. Obviously, that was low of the move. The only thing I can point out to our listeners is when we hit 26.83 a few days ago, it traded 111 million shares. We made a new low yesterday on lower volume. So maybe the sellers are getting exhausted, but still that $25 level, that was the original
Yep.
original low of the IPO range. So if you're buying it here, you can put a stop at 24.99, and hopefully they won't get you.
I think that $25. I think it might see that $25 level, and maybe even by the end of the week. But you know, you always have short squeezes. A lot of people bearish this stock. Sentiment's obviously negative on this, which can drive the price higher. But I think we see 25 before this thing starts to rally.
Okay, well, that's our show for today, folks. If you have any questions, please send us an email at info@premarketinfo.com. We'll talk to you tomorrow.